Welcome back to our channel. Today, we re-diving into a topic that affects millions of retirees in Germany and will bring a huge change starting in 2026. We re-talking about the new active pension and the opportunity for retirees to earn up to €2,000 tax-free. If you're already a retiree or preparing for your retirement, then this video is perfect for you. Stick around until the end, because I am going to explain all the important details on how you can benefit from this new regulation and what you absolutely need to know. Before we get into it, let me quickly tell you why this topic is so important. Many retirees in Germany want to stay active in their retirement, whether for financial reasons or simply because they enjoy working. Until now, however, there were many restrictions and complicated rules that made it difficult to earn extra income alongside a pension without facing tax disadvantages or pension cuts. The new active pension, which comes into effect in 2026, aims to solve these exact problems and give retirees more freedom and flexibility. First, let's look at the current situation and why a reform was necessary in the first place. Millions of people in Germany receive a statutory pension, but for many, this pension isn't enough to maintain their accustomed standard of living. Inflation, rising living costs, and sometimes unexpected expenses make it necessary for retirees to earn some extra money. At the same time, there's a shortage of skilled workers in many sectors, and companies would love to tap into the experience and knowledge of older employees. Previously, retirees who reached their standard retirement age could generally earn unlimited extra income without their pension being cut. That sounds good at first, but the reality was more complicated. Even though the pension itself wasn't reduced, retirees had to pay taxes on their additional income, often in a way that made earning extra money unattractive. Many retirees wondered if it was even worth working if a large portion of their earnings went straight to the tax office. This is exactly where the new active pension comes in. Starting in 2026, it will be possible for retirees to earn up to €2,000 per month tax-free. This means that this €2,000 will not be taxed and will remain entirely with you, the retiree. This is a huge improvement and offers many retirees the chance to significantly boost their income without worrying about high tax burdens. Now, you might be wondering who exactly can benefit from this regulation. Basically, the new active pension applies to everyone who has reached the standard retirement age and receives a statutory pension. The standard retirement age is currently between 66 and 67, depending on your year of birth. So, if you're already a retiree or will be soon and have reached the standard retirement age, you can benefit from this new rule. It's important to understand that this tax-free limit of €2,000 per month is in addition to your regular pension. This means you will continue to receive your full pension and can earn up to €2,000 tax-free on top of that. Annually, that adds up to a considerable sum of €24,000 that you can earn tax-free. For many retirees, this can mean the difference between a comfortable life and financial worries. Let's take a closer look at what types of income fall under this regulation. Generally, the tax-free amount applies to income from employment. So if you continue to work as an employee or have a mini-job as a retiree, self-employment activities can also be included under certain conditions. The key is that it must be active income, meaning money you earn through your work. Income from rentals, capital gains, or other passive income sources are not covered by this rule. As the name suggests, the active pension is specifically designed for retirees who want to actively participate in the workforce. The goal of the reform is to encourage older people to work and, at the same time, counteract the shortage of skilled labor. Another important point is that the €2,000 tax-free limit is per month, not per year. This means if you earn less than €2,000 in 1 month, you cannot carry over the unused amount to the next month. It's a monthly limit that resets. For example, if you earn €1,800 in 1 month, the remaining €200 are forfeited and you can't use them in the following month. Now, I want to touch on an aspect that is important to many retirees: the impact on Social Security. If you work as a retiree and earn up to €2,000 tax-free, the question arises about Social Security contributions. There are different scenarios here depending on how you work. For a mini-job up to €538 per month, the well-known mini-job rules apply. The employer pays flat-rate Social Security contributions, and you, as the employee, are largely exempt from contributions. For a midi job between €538 and €2,000, the so-called transitional zone applies. Here, Social Security contributions increase gradually but are still more favorable than in a regular employment relationship. It's important to know that as a retiree who has reached the standard retirement age, you no longer have to pay contributions for health, nursing care, or unemployment insurance. Only pension insurance contributions may apply, but you can request an exemption from this if you wish. Many retirees choose to continue paying these contributions because it slightly increases their future pension. A topic that concerns many retirees is how extra earnings affect other benefits. If you receive, for example, basic security benefits in old age in addition to your statutory pension, additional income can affect this benefit. Here, basic security recipients have an allowance, and not every euro they earn is counted. The exact regulations are complex, and in such a case, I recommend seeking advice from the German pension insurance or a social association. You should also check if your company pension or other supplementary pensions have rules that could be affected by additional income. In most cases, there are no problems, but it's always better to be informed beforehand than to face an unpleasant surprise later. Let's now talk about practical implementation. How can you, as a retiree, benefit from the new active pension, and what do you need to do? First, of course, you need a job or activity that brings you an income. Many retirees opt for a mini job, which can often be flexible and doesn't require too many hours per week. Others work part-time or are self-employed. When you start a job, you must inform your employer about your retiree status. The employer then needs to calculate and pay the Social Security contributions accordingly. In your tax return, you'll declare your income from employment and can then claim the monthly €2,000 allowance. This allowance is usually automatically considered when calculating your tax, but it's important to keep all your receipts and records. Many retirees wonder which jobs are particularly suitable for earning extra money in retirement. There are many possibilities, and it naturally depends on your skills, interests, and available time. Popular options include jobs in retail, especially in sectors that offer flexible working hours. The hospitality industry also often needs experienced staff. Many retirees also use their professional experience and work as consultants or freelancers in their former field. This has the advantage that they can contribute their knowledge and expertise and often achieve good hourly rates. Others discover completely new fields in retirement, perhaps in areas that have always interested them, but they couldn't pursue during their working life. Another aspect I want to address is the importance of the new active pension for society as a whole. The reform makes it more attractive for retirees to participate in the workforce, which has several positive effects. On one hand, it helps to counteract the skilled labor shortage, as many retirees have valuable experience and skills. On the other hand, it promotes the social inclusion of older people, because work means not only income but also social contacts and the feeling of being needed. Studies show that people who remain active in old age are often healthier and happier. The opportunity to work without worrying about high tax burdens can therefore also contribute to a better quality of life in old age. Of course, work in retirement should always be voluntary, and no one should be forced to work just to make ends meet. The active pension is meant to be an option, not an obligation. Now, I want to address some common questions and misunderstandings that arise in connection with the new active pension. One frequently asked question is whether the €2,000 limit is gross or net. The answer is that it's the gross amount, meaning the income before Social Security contributions are deducted. However, this amount is tax-free, which means you pay no income tax on these €2,000. Another misunderstanding concerns whether you can have multiple jobs to use the €2,000 limit. The answer is yes. You can certainly have several part-time jobs or activities, as long as the total income from them does not exceed €2,000 per month. It's important that you add up all your income and declare it accordingly. Some retirees also wonder what happens if they earn more than €2,000 in a month. In that case, the excess amount is taxable and is added to your taxable income. It's therefore important to keep an eye on your earnings and plan accordingly to make the most of the tax-free limit. One important point that is often overlooked is reporting to your health insurance company. If you take up employment as a retiree, you must inform your health insurance. They will then check if your additional income changes your insurance status or your contributions. In most cases, earning up to €2,000 has no effect on health insurance, but the reporting obligation still exists. Let's also talk about the future outlook. The new active pension from 2026 is a first step, but there are already discussions about further reforms and improvements. Some politicians and social associations are calling for the tax-free limit to be raised even further, or for additional incentives for retirees who want to work. It remains to be seen how the regulation will work in practice and whether adjustments will be made. For you as a retiree or future retiree, it's important to stay informed about changes and new developments. The German pension insurance offers free consultations where you can get all your questions answered. You can also find help and support from unions, social associations, or tax advisors on the topic of earning extra income with a pension. A practical tip is to think about whether and how you want to work in retirement even before you reach the standard retirement age. This way, you can look for suitable job offers in time, or perhaps even arrange with your current employer to continue working part-time after retirement. Many companies are interested in retaining experienced employees and offer flexible working models. If you are self-employed or work as a freelancer, the same rules generally apply as for employees. However, you have to make sure yourself that you calculate and tax your income correctly. For the self-employed, income is often not distributed evenly each month, and there are fluctuations. Here, it is particularly important to keep accurate records and, if necessary, consult a tax advisor. An aspect that should not be forgotten is the effect on the pension itself. If you continue to pay into the pension insurance as a retiree, you increase your future pension. This increase is calculated once a year and added to your pension. This means that working in retirement is not only worthwhile in the short term through additional income, but also in the long term through a higher pension. Many retirees also appreciate the structure that work provides. After a long professional life, some find it difficult to adjust to a daily routine without fixed working hours. A few hours of work per week can help structure the day and provide a meaningful activity. It doesn't always have to be about money, but the option to earn something tax-free certainly makes it more attractive. Finally, I'd like to give you some tips on how to make the most of the new active pension for yourself. First, inform yourself thoroughly about all the regulations and make sure you understand how the tax-free limit works. Second, plan your additional income so that you get as close as possible to the €2,000 limit without exceeding it. Third, use the advisory services available to you, whether from the pension, insurance, social associations, or a tax advisor. Fourth, think carefully about what kind of activity suits you. It should be something you enjoy and can handle physically and mentally. Retirement should, after all, also mean relaxation and free time. Fifth, keep accurate records of your income and all relevant documents. This will make your tax return easier and help you keep an overview of your financial situation. Remember that working in retirement isn't for everyone. Some people want to enjoy their retirement completely without employment, and that's perfectly fine. The new active pension is an offer, not an obligation. Everyone should be able to decide for themselves how they want to shape their later years. In summary, the new active pension from 2026 is a significant improvement for retirees in Germany. The ability to earn up to €2,000 per month, tax-free, gives many people the chance to supplement their income, stay active, and continue to participate in social life. It's a reform that addresses both the individual needs of retirees and the demands of the labor market. If you want to learn more about this topic or have specific questions, feel free to leave a comment below this video. I'll try to answer all questions and look forward to the discussion with you. If you liked the video, give it a thumbs up and subscribe to the channel so you don't miss any more videos. Thank you for staying with me until the end. I hope this video was helpful and provided you with all the important information about the new active pension. If you have questions or want to share your own experiences, use the comment section. Until next time, and all the best for your future in retirement.